In recent weeks, a new solution has been thrown at America: the 50-year mortgage. Yes, half a century of debt. Because here, extending the pain is easier than fixing the system. Everyone who heard the idea said the same thing. What is this nonsense? Because a 50-year mortgage doesn't make home ownership easier. It just turns people into long-term revenue streams for the system. The average first-time homebuyer in the US is now 40. Take a 50-year mortgage at 40 and the math gently whispers, you'll still be paying 11 years after you're dead? That's not a loan. That's a generational curse. A $320,000 loan costs $1,919 per month over 30 years. Stretch it to 50 years and it becomes $1,685. A difference of just $235. 20 extra years of debt for a couple $100? That's not affordability. That's desperation disguised as policy. Finance bros jump in immediately. If you invest that $235 every month, you'd retire a millionaire. Right, because someone taking a half-century mortgage is absolutely dollar cost averaging every month. In reality, that money gets eaten by bills, groceries, life. Even tiny reductions in monthly payments boost demand. More demand equals higher prices. Same thing happened with student loans, auto loans, buy, now pay later. Whenever credit is easier, everything gets more expensive. Japan tried 50-year mortgages in the 1980s. The result? The biggest housing bubble in recorded history. They still haven't recovered. But sure, let's try the same thing here. What could go wrong? Who profits from all this? Not first-time buyers, not families, not young people. The winners are Wall Street's mortgage-backed security machine, institutional landlords, and big developers. And the guy who floated the idea, the FHFA director, his family owns one of the biggest development companies in the country. Totally a coincidence, obviously. Sure it is. The housing market is cracking. Buyers can't afford homes. Sellers won't give up their low-rate mortgages. Institutional investors want to unload their portfolios, but buyers don't exist. Banks have been doing this quietly for years. They don't mark missed payments as delinquent. They stretch the loan and pretend everything is fine. A 50-year mortgage is simply the national version of that trick. The real fix would be 15-year mortgages, prices would fall, equity would grow faster, markets would normalize, but investors would lose billions. So it will never happen. The 50-year mortgage wasn't created to help you. It was created to save the system, to buy a few more years while shifting the pain onto the future. What this policy really says is, don't let prices fall, don't let portfolios shrink, make the next generation pay. The 50-year mortgage doesn't make home ownership easier. It just delays a collapse while dumping the cost onto you. In this game, the rule is simple. The elites win, everyone else pays.